If you're missing a T4, T5, or your tuition tax slip, you might be wondering, should I just file anyways? And the answer to that is, well, if you file too early, something else may come in during that time, which will either cause you to have an incomplete tax return, delays slash reassessments, or just an overall big headache with the CRA. In this video, I'm going to give you a simple rule to keep in mind when it is safe to file your tax return, when you should wait, and the overall best strategy to make sure that you're not panicking, but rather doing it right, correctly, and only once. This applies to anyone waiting on their T4 slip from their employer, the T5 or T3 slip for any investment income, and if you're a student, perhaps the tuition slip. Remember, most problems in tax season occur not from people doing anything crazy, but rather from rushing. So you want to be making sure that you take your time and you wait for the best moment to file. The real question here isn't can you, but rather should you. Yes, you can submit your tax return at any point, but should you submit your tax return? And the answer to that question is no. Why shouldn't you? Well, if you don't have all your slips and something comes in later, that is considered an incomplete tax return and it will have to be corrected afterwards, okay? So this will be a huge cause for concern if you guess or have an estimate and that income is not the same as the income on your tax slip. So make sure that you don't do that because you may have to correct it afterwards. Remember, the income slips, they're basically income that is reported that is earned. Okay, so your T4, T4A, T5, these are all amounts that you've earned in the year. So they have to be filed with your tax return. If you don't, you will have it'll have to be reassessed. It'll likely be reassessed from the CRA, and you may get audited from that. So it's never good to forget a slip or not to include a slip because the CRA actually has access to all your slips. So what does that mean? That means if you're, let's say, an employer, let's say you work for a company, your employer, they end up filing that T4 slip, sending it to the CRA, and then it's in their system. So you can't just hide income like that. You can't just think to yourself, well, how would CRA know? They actually know because they have an agreement with the bank, with your employer, that this information has to be filed with them. So all your T5 slips, all your T3 slips, that will be at some point in the CRA system. So it'll be a huge red flag for you, not including any income or any slips in your tax return. So remember, if you worked briefly, even you worked briefly for an employer, that T4 slip will have to be also filed. And remember, not all slips arrive at the same time. So for example, if you have your T4, that likely comes in March, okay? Or April, even sometimes even in April, your employer doesn't get it out in time. Your investment income, depending on what your investments are, who they're with, that can also come out later as well. For example, if you have any trust or partnership, these ones are due March 31st for your trust or partnership to file, whereas your T5 slips are due end of February. Okay, so remember, they don't all come at once. So it is likely the best time for you to file in April because generally that is the time when all your slips should be coming in. Okay, so the safe test here is making sure to ask yourself, do I have all my tax slips? Right, that's the first thing, because you don't want to file income with an incomplete tax return and be audited by the CRA. That's the last thing. So you're going to ask yourself, did I receive all my slips? Did I receive my T4 from my employer? What investments did I have in the year? Did I have an investment with RBC, BMO, TD? If yes, did I get a slip from them? And you may not have, right? Sometimes if you have an investment account run by a bank, they send you one big package, okay? And in that package you have all your slips, okay, and also your capital gain uh, schedule as well. So making sure if you wait, and if you don't have a tax slip and if it's missing, okay, better to not rush and panic and file without it, but rather wait, okay? Only time it might not be acceptable is if you're really at the end of April when it's due, April 30th, then you should file. But of course, most of your slips should be coming by April 1st. If you don't have a slip the first week of April, you have to reach out to either your employer or the bank or any of your investments, whatever you have. You should reach out to them directly and ask, well, where are my slips? Because at the end of the day, they are responsible for sending you that. Okay, it's not on you to keep track of that, it's on them, because they need to file that with the CRA as well. So if you did file and the slip shows up later, you don't want to ignore the slip. You want to make sure you go back and include it there. So you will have to go back and amend your tax return to include that slip. But many times that will be done automatically. For example, if you have a refund, you get a reassessment right away, and your refund gets lower for that amount. Okay. Here are the takeaways. Can you file? Yes. Should you? No. Make sure you have all your slips in. Double check to make sure that all the slips came in that should have came in. You can take a look at the prior year and compare it to this year. Don't guess any income. Don't estimate it. It's not worth it. You're likely to get it wrong. Okay. And you want to make sure you do it once cleanly. So take your time. Don't rush to get it done. Take your time until all your slips come in and you do it the right way. Because if you don't, you might have some major headaches that could be a red flag with the CRA and open an audit for that year and previous years as well. Okay. And remember, if you are filing your tax return and you want to do it yourself, I recommend using Wealth Simple Tax. That's the software that I use. I think it's the most user friendly. And if you look in the description, you can see if you fund your account, we both get $25, which is great. So in my next video, I'll break down the most common CRA audit triggers, the patterns that get returns reviewed, and what people think usually looks fine but isn't. Okay, so I want you to subscribe for more Canadian tax clarity. This is general information and not personalized tax advice.